welcome back. My name is Zane and today we'll be having a look at Gores Guggenheim, the GGPI stock, and we'll also be taking a look at Polestar obviously. Now Polestar is currently in the processes of merging with Gores Guggenheim. It will be a SPAC merger, and as most of us know, Gores Guggenheim, the GGPI stock, it's a special acquisition company and it hopes to join force with Polestar. They will combine to make one company. And ultimately, that's what SPACs are. They are publicly traded companies that are raising funds to join another company, and so that company in question will benefit from being automatically public. Now today we're specifically looking at Polestar because they have a bright future, and we want to understand, is it a good thing to invest in Polestar before the SPAC merger, or should you wait until the SPAC merger is completed? So naturally, before we continue, allow me to declare that this video is not financial advice. It's strictly for educational purposes and entertainment purposes. Now the interesting thing of course is that a lot of people do have extremely high expectations for Polestar and the GGPI stock. They have extremely unrealistic expectations for the Gores Guggenheim stock, and I'm not entirely sure why. What people fail to understand is that the SPAC merger is not completed. Therefore, a lot of institutional investors are refusing to invest this early simply because it's not completed. It's not a deal that's set and done. Now, when most people on the internet, on Twitter, they look at a stock, they look at stocks like Rivian, they look at stock like Netflix and Tesla, and they see these stocks are able to have a daily increase of multiple numbers. These stocks are able to go up 10%, 20%, 30%, sometimes in one day, and they think this is normal for the entire industry. It's not normal for the entire industry. Those stocks that you're taking as examples, they have a lot of institutional investors, which means that there's a lot of big banks, big companies, big corporations that are investing in those specific companies. Therefore, it makes a big difference when the stock goes up and down. The GGPI stock merger is not complete. Therefore, those institutional investors are not investing in GGPI heavily. They're not investing a lot of volume. They're waiting until the SPAC merger is completed. And that's a smart thing for them to do because they will end up putting their capital less at risk. And most of those companies, they will determine if it's better option to invest in Gores Guggenheim / Polestar, or is it better worth it if you put your money into Tesla? And most of those investors are choosing Tesla. And even if they don't choose Tesla, they have multiple other EV companies that they can choose. So my problem is a lot of people do put unrealistic expectations on the GGPI stock, and it's ridiculous as at this moment. We have to wait for the merger to complete to determine what the correct price of Polestar stock should be. We're a long way from seeing billions of dollars being piled into Polestar. We're a long way from it. But that's not a bad thing, and people do misunderstand this quite oftenly. If we look at the charts for GGPI, the all-time high was actually in November last year, 16th of November. The price rose to as high as $15.33. But a lot of people have higher expectations. I see people online predicting GGPI to be $30, $50, $60, $100 before the SPAC merger. That's completely unrealistic, and we should learn to lower our expectations. Now, Polestar last year was at an evaluation of roughly $20 billion. Now currently we know Polestar is owned by Volvo. It's partly owned by Geely as well. Overall, Geely is the majority stakeholder because Geely also owns a large percentage of Volvo. Now Polestar manufactures the Polestar 2 at its production facility that's located in Chengdu, which is about 1,000 miles from Shanghai. However, with the recent lockdown in Shanghai, there's been a lot of suspicion that this could hinder GGPI, this could hinder Polestar in many ways, this could affect the brand. And while Polestar isn't immune to such effects, we must remain positive that as long as the SPAC merger goes through, there shouldn't really be much issues on the financial side. Polestar will be well funded, it's already well funded, and its capacity for this year is already being increased. So while I can't provide you with financial advice, all I can do is share my personal opinion. Now, Polestar has actually been the third best-selling EV in Norway in the month of February, which was incredible to see. Now, I've had some recent news that it looks like Teslas, they bring their EVs into Norway in the second quarter of the year, which means that the Tesla vehicles were not in the league of competing against the selling vehicles, the selling EVs in Norway at the time. But it's not just that Polestar intends on ramping up production to 69,000 vehicles, but the 65,000 vehicles order from Hertz, and that's a 5-year span plan. That's a 5-year span partnership. This already puts Polestar in direct competition with Tesla. Now, this put Polestar in direct competition with a lot of EV manufacturers in China as well, such as NIO and XPeng, which is huge to competing in the Chinese market. But it's also crucial. They're building their Polestar 3, that's the SUV, the fully electric SUV, in the United States. That's a great place to build those vehicles because people in the United States, they love SUVs, and electric cars are becoming a new normal. You get high demand for SUVs in the United States. There's no secret about that. And those cars will be available to be purchased early next year, all over the United States. Just imagine what that's going to do. Now, to be honest, I don't think there's a bad time to buy the GGPI share or the Polestar share, specifically because at the moment, the market cap is 1.1 billion. The price per share is $11.78. It's extremely undervalued. And this isn't a bad thing. The longer it stays undervalued, the longer the share will remain quite cheap, will remain quite affordable. Long term, this is good for people who want to invest when the price is low. Now, what's interesting about the deal with Hertz is that it's rumored to be around $3 billion. $3 billion worth deal for Hertz and for Polestar. That's over the next 5 years. Polestar could be taking in roughly $3 billion US from Hertz, from the 65,000 vehicles that are promised. If Hertz decides to order more vehicle from Polestar, this number could rise. So this is brilliant for Polestar. So what's next for Polestar? Polestar expect to produce 290,000 EV per year by 2025. Ladies and gents, we're in 2022. We are less than 4 years away from this happening. Polestar will be at over 250,000 vehicles producing per year, electric vehicles. By that time, Tesla will be producing maybe 2 million, 2.5 million, maybe 3 million. So understandably, it's going to be a while before Polestar is at the same level as Tesla. So at the same time, this is why I have to tell people all the time, keep your expectations low, keep your expectations reasonable. It's going to be a long time. It took Tesla a long time to make 1 million vehicles. It's going to take Polestar a long time to do the same. So you have to remain optimistic and sensible. Now, Volvo expects to invest $118 million in EV production in South Carolina plant. Polestar's unique ownership by established automaker gives a massive advantage over competitors like Lucid, Rivian, and this is true. Polestar has the support of Volvo, they have the support of Geely, which in itself is a giant, and Volvo in itself is an expert at making some of the most safest vehicles on the road today. So the SPAC merger between Gores Guggenheim and Polestar is expected to close in the first half of 2022. So we're now in the month of April, next up is May, next up is June. We could be seeing the SPAC merger being completed within the next 3 months, which is brilliant to see, and I'm looking forward to this, of course. My explanation for people is to lower your expectations for Polestar, the GGPI stock. Lower your expectations. You should be happy that the share is this cheap. Everyone wants it to be $50, $100. I'm seeing it all over Twitter. Honestly, super happy to see the price this cheap because it's good for me. I buy at a discount. Why would I want it to be expensive if that's just going to cost me more money and I'll get less shares? And when the SPAC merger is completed, the market cap will turn from 1.1 billion into 20 billion. Take that into consideration. Take that into consideration. Thank you for watching. Subscribe to see more. Leave a like, leave a comment, and of course, I will see you in my next video.